Let's talk about annuities. What are annuities? Why do people oftentimes purchase or invest in them? What is the desired outcome? First and foremost, disclosure, I am not a financial advisor. I do not provide tax, legal, or other types of financial advice. I am giving you my personal opinion and experience, which doesn't mean it applies to you. You should always discuss with your financial advisor, tax attorney, CPA, whoever helps you, financial advisor, with the ins and outs of your particular situation. So again, do not take my provocations here as something that you need to do or make a difference. Let's just talk about from a total vantage point. Also, my missive here applies really to people who desire and are on the forefront of wanting to direct their own financial future. This is not for everybody. Many people need to follow the Wall Street constructs of IRAs and retirement plans and 401ks. And if that's you and you're happy there and feeling good about it, then just disregard everything I'm having to say. I am not putting anybody down. I'm just saying that there's always another side of the coin. And Wall Street is very good about marketing their message and telling you, you need this product, you need that product. And I see too many people, in my opinion, that I get the blessing to work with, that show up with a hodgepodge, a spaghetti on the wall type of financial plan, if you even call it that, that has no orchestration whatsoever. So again, what's an annuity? An annuity is a guaranteed income stream backed by insurance companies. And for the most part, we got to say insurance companies are pretty strong. In fact, if they go down, they get bailed out, right, by the government. We've seen that back in 2008. So when we say guaranteed, pretty close to being guaranteed. And an income stream has certainty, has an interest rate to it, is paid out generally monthly, maybe quarterly, but there's an income stream, and everybody wants some certainty in their life, right? And particularly when you leave active income, you're saying, well, what's going to replace the active income that I gave up? I sold, I retired from my practice, whatever it is. We want that, right? That's really the key. And I agree, that is a key. How do you create replacement income? There's many ways to do it. Annuities are a product, they're sold to help do that. What are the other benefits? Well, tax deferred growth. So it's like any retirement account that's tax deferred. It builds up the profits. It builds the accumulation growth in it, tax deferred, and you only pay tax when you take the actual annuity payments. And again, there's different terms and different constructs. There's a lot of flexibility in how an annuity is designed, how long it pays, for whose life it pays, when it starts, many different aspects, which this is not the main goal of this particular presentation here today, but just know there's lots of options. It's complex. Complexity, in my opinion, often breeds issues down the road in anything, not just annuities, but I tend to try to steer away from complexity. If I don't understand it, if it's got too many pages, and I've seen these annuities and they go on and on and on and on, and you've got to have somebody, a translator to look at them. I have people that have purchased annuities in good faith, and maybe they were right, maybe they were wrong, but they had no idea what they had. Why do I have this? I don't know. Someone sold me and told me it's a good thing to have. They don't even know what they have. Again, not being a financial advisor, but I can read and I can tell them, well, here's basically what you've got. Is it something that you want to keep? Well, many times you're locked in. The downside to annuity is you're locked in many times. If you want to take your capital, your investment back out again, you're going to pay penalty, and tax on it. Maybe not the thing that you signed up for. So I don't like the lock-in feature of them. As I said, they are customizable, so that could be a benefit. They certainly protect against downside equity stock market volatility, and that's something that most people, when they go into retirement mode, they don't want to have the ups and downs of volatility of the market. So that's a good thing about a guaranteed income stream. Provides some estate planning benefits, so certainly there can be passing on the annuity if it's customized in that way to pass it on to future generations, your heirs. Some of them allow for that in that case. But as I said, some of the downsides are the complexity. They come with high fees and costs. Look, all the companies and financial advisors and people who sell these products, they got to make a living. So there's a spread, and there's going to be always cost to these things. Again, are they warranted? That's a decision you have to decide and make. I'm just saying you have to understand and look at what the costs are before you decide. Lack of liquidity, as I said, you're locked into these things. To get out, many times you have to pay a penalty. So once you sign up for one, you're in it. I don't particularly like that. It's kind of like being in a 401k or an IRA. You can't access those funds until you're 59 and a half. What if I want those funds earlier? What if I have a better opportunity than I saw back when I went into this particular lockbox of a retirement plan or annuity. That's something to consider as well. Interest rate risk. So you lock into an annuity at a certain strata in the interest rate market when you bought it, and if interest rates go up, well, you're stuck. You can't buy up or move it up. You're stuck there at whatever your interest rate you bought in at. Some of them do provide for inflation hedges. Again, there's a cost to that. So some of them do provide some inflation hedge, so that could be a benefit, but there's always a cost. There's always a trade-off. Limited growth potential. So again, once you lock into an annuity, if inflation comes back and rears its head like it has recently, the value of that income stream down the road is going to be very much diminished. Got to keep that in mind. What sounds good today in terms of a monthly, quote, guaranteed payment stream, in 10 years may not look so good. You've lost the growth. Inflation has devalued that income stream. Keep that in mind. The tax implications. So while the annuity can grow and build tax deferred, when you take the withdrawals, the payment stream, you pay tax at ordinary income tax rates. You don't get any long-term, you get no long-term capital gains treatment, which is almost always lower than ordinary income rates. And there's no stepped up basis like we have in other assets. So you lose some real generational wealth transfer benefits and tax benefits, even though there's a tax deferred component in these. And also, it doesn't leave any flexibility for your heirs. Whatever you signed up for and you pass away, and if there is a payment stream that can continue on to your heirs, they're stuck with it. There's no choices. All right, what's the alternative? Look, in my world, I can create annuities all day long through direct investments secured by real estate. Doing the same thing. I can invest in the part of the capital stack, which means the debt side or private credit side, and create the same income streams and I can create them so they're not locked up. For the long term, I can have the flexibility to cash out when I want to of these. I can pass them on to my heirs if I want to, and there's no stated period of time when my income streams are cut off. In an annuity, there's always a point where it cuts off, where it's over, and that capital investment you put in, you never get back. That's it. You paid in, you get some payments out, and that's it. With the income streams that I can create in my own world, there's no cutoff date. I can always get my capital back. Certainly, I might tie it up for certain periods of time, but I have the flexibility, just like you do with an annuity. But I don't have all the complexity. I don't have all the fees. What I do have to have is access, a knowledge base, and a network, so I know where to create these income streams. I've done it all my life, but again, I had to do the work on the front end to gain access. I created a network where this is what we do. We curate these opportunities. We do the due diligence, the underwriting, create the education, so that we become our own advocates for our financial future and are not relying on what Wall Street is trying to create for us. Again, I'm not saying that those are bad, but I'm saying they don't provide the flexibility and nearly the kind of returns that I can create on my own if I desire to be more of an advocate for my financial future. So that's it for me on Annuities Day, or what I would call more certain, quote, guaranteed, more predictable income streams. There's different ways to create it. And I think that if you're looking for that, you ought to look for some of the options that you may have in the marketplace that you haven't looked at, because Wall Street just doesn't offer them. They offer certain products that benefit them, and you either take it or leave it. So that's it from me for today. Remember, this is not financial advice. Seek your own professional advice before you make any moves in any respect.